Hey there, it's Amy Lewis from the KFBK Morning News, and this is the Catalyst Report. Thank you so much for being here. I'm with Brandon Haefele, the CEO and founder of Catalyst Mortgage. Okay, so here's the thing. You have been pre-qualified for a home loan, right? And you have found the home of your dreams. You're ready to put an offer on that home, and you find you've been scooped by somebody who has been pre-approved for a home loan. So what's the difference between pre-qualified and pre-approved? So let's start off, first of all, with pre-approved. What does that mean?
You know, a pre-approval, as you would also call it, is going to a lender or a mortgage broker and actually providing all of your income documentation, having your credit pulled, have everything reviewed, your debt to income ratio, making sure that you truly are income and credit qualified to purchase a home. Whereas a pre-qualification is just knowing what your credit score is, and that, yes, based off of that minimum credit score, you could get a home loan.
So if I go in and I pre-qualified, and I think that means I can, put this offer on the home, and somebody comes in pre-approved, it doesn't mean that you can't still put an offer on the home. You can, but you have to go through the steps that this person already did.
And exactly. And really, Amy, with this market and the way that, Northern California is right now, we're in a multiple offer situations, you really need to be pre-approved up front. You need to actually go through the full credit approval process, have your income and assets reviewed. The big thing, though, when we'll talk about a pre-approval, and this is the thing that's frustrating for consumers, it's different from every lender. Their interpretation of a pre-approval. One thing and why this topic...
Well, hang on. Yeah. What's your interpretation of a pre-approval?
My interpretation is a full income by a seasoned mortgage professional. It could also be by an underwriter, but really by a seasoned mortgage professional of your income, your credit, assets, making sure everything qualifies, your debt to income ratio is in line, and so on. And the reason why I say, I said a mortgage professional, a lot of mortgage companies, and there are several in the Sacramento region, that consistently say you must have a full underwriter approval, you must go through this entire process, and if you don't, your mortgage professional or the company you're working with doesn't have your best interest at heart. And that's crap. I mean, I'm saying blatantly it is. It's so wrong to say, you have to go this route, the fear factor, and if you don't. There are many mortgage brokers, there are many seasoned mortgage professionals at banks, credit unions, and direct lenders that know how to review income, how to review these assets, and make sure that you qualify. Especially because Fannie Mae and Freddie Mac has what's called DU and LP, Desktop Underwriter for Fannie Mae, Loan Prospector for Freddie Mac. And what those do is once that professional has reviewed the income, reviewed the assets, they can put the information into the system, and it will actually generate essentially like a mini approval, if you will, that says any conditions that the underwriter will need. And most lenders nowadays follow that to the T. So my point is, don't get concerned so much about, I must go through a full underwriter approval that could take 2 or 3 weeks, or 2 or 3 days, whatever the process is, depending on how they do their pre-approval status. But focus with a professional that has been in the business long term, knows how to look at these things, and can actually just give you the good information up front without the fluff.
Here's the thing, though. So you just talked a lot of, I don't want to call it jargon, but language that as a general consumer, I may not understand. So when you talk about Fannie Mae and Freddie Mac, right? Sorry. Is that something that I, as the consumer, need to know, or is it, because if I'm watching this right now, I'm gonna start writing this stuff down. I always take very copious notes on things. So should I be writing this down, or should I just know that my mortgage lender needs to know that, and I need to work with somebody who's completely educated in that?
I think it's both.
And they would be.
I think it's both. I think as a consumer, knowledge is power. So you're knowing what you're getting into and getting a pre-approval. You're working with 2 or potentially 3 lenders that you're speaking with to go ahead and have things reviewed and look at everything. But to know the process, when you go to apply for a loan, you speak to a mortgage professional, you provide your income and credit documentation up front so they can actually give a pre-approval, and they can run your file through that system for a Fannie Mae, Freddie Mac, or FHA loan to find out, okay, are you qualified? One thing to keep in mind when lenders tout left and right that, we have our underwriters look at files, everything's fine-tooth comb. Most mortgage professionals, a seasoned professional in this industry, knows what the heck they're doing. So the idea that you're trying to do a fear factor, that loan officer A, this mortgage broker, because again, we've talked about it, brokers are a great part of the industry, direct lenders are, and banks. But to try to, what we see more often recently is lenders will say, well, this person doesn't know what we're doing, but we can do this. As a seasoned professional, the guidelines are simple. Income and assets are very simple for a lender or for a mortgage professional to decipher. Use somebody that can actually, understand both of those things and give you the right information.
So being pre-qualified is important, but when you're talking about putting an offer down on a house and you want to beat somebody, because this is an incredibly hot market right now, you want to get pre-approved.
Absolutely. You want to be pre-approved, and you want to make sure that you're working with it. First off, that you've done your shopping, shop around first.
Yep.
Find out approximately how, ballpark rates for what things are, at that time. Pick one lender after you've done that and say, okay, this is who I'm going to move forward with. Make sure they can close at a very, fast pace, if needed, 21 days or less when it comes to a purchase. Because those are things during that offer that you put in that you want to make sure they're notating. Also make sure that when you're working with this real estate agent that you have, that, okay, are you comfortable with my lender calling the selling agent to explain my financial position and that I'm okay to buy? Because every little bit helps. The mortgage professional should be calling to help you, sell that, hey, we've already pre-approved Amy Lewis, she's good to go, and so on. Make sure you're doing that, but also know the terminology yourself, so when there's, starting to spout off information, it makes sense, to you. Just like when we've talked, there's times that you just say, hey, slow down, because it's our industry, it's what I know. But as a consumer, you're the one that has to say, stop, go, okay, I'm ready to proceed, let's do this.
No, but that's why I think these are so really important. So now that you've been pre-approved for a loan, how important is it to lock in a rate? We're going to talk about that next time. That is the Catalyst Report. Thank you very much, Brandon Haefele. And now you know the information you need to know to get pre-approved for a loan.